All right. So, yeah, we kind of tapped the high of the implied move and the low. This is a little overextended on here because I used the average, but oh no, I just didn't redo it for last night. Never mind. High and low of the implied move for the intraday. Pretty much immediately selling off with hawkish Fed rhetoric and slightly higher unemployment. So, obviously the Fed's focus is shifting back to inflation and away from the labor market, with the NFP report coming in real hot, despite rising overall unemployment, which can lag, private sector jobs pretty significantly, so not as important. Um, the Fed's definitely going to worry more about inflation. December cut is extremely unlikely, and also rate cuts further out getting priced down. That saw us, retest the prior week open here on ES. We shot a little higher on those Nvidia earnings, and then sold off right throughout the entirety of the day, making a new low, and approaching the October sell-off low, down here at like 65.40. That would complete this distribution, but it's still a very long way from completing this distribution. So there's plenty of room below us. Um, Yields pretty much falling across the curve, but felt strongest in the belly. Dollar up again, pushing back over 100, up about 14 points today. We see correlation on the 1 and 3 month. They reversed that yesterday with Nvidia earnings, and then we saw it just snap right back to the upside, making a new high uh, on both. So big breakdown in dispersion across the board out to like 90 days. Commodities falling, gold probably the most stable, silver losing 140 points, copper down 127. Agricultural commodities down and oil down as well. We should see a spike in bond volatility after today, but now we see a 3 month correlation finally, really picking up some upside steam, kind of breaking out above levels since June. So we should see the subsequent move in bond volatility as that correlation breaks down and bonds become more attractive. Leverage on the carry trade at an all-time high, or very close to an all-time closing high, I should say. But if we go here to the daily, I think there's a slightly higher level back in January of this year. Um, Forward yield on volatility closing the day out at like 15.86%. Again, much higher than anything we've seen since April, when we saw the market turn down about 20%. The market hasn't even fallen that much yet. So the drastic increase in the forward yield on volatility is probably very concerning. Generally, those spikes lead to fairly significant market corrections, and it looks like that might be where we're headed here. Skew still chopping. Obviously, all of the gainers pulling back, some even turning into losers. I think notably Nvidia down 3% today after beating and raising guidance. So the channel stuffing that they're doing in their earnings clearly isn't convincing anybody that they're worth $5 trillion. Um, VIX correlation still picking up. So, like we saw yesterday, short vol giving up, and we saw that pattern continue into today, setting a new local high for VIX and getting fairly close to the October high here into the end of the day. Any fall in the overnight session is going to compound that effect. Fed Fund futures chance of a rate cut further out into the March and June meetings going up slightly. So rolling those Fed cuts out, from the start of the year, with very little chance of December. Probably not much, until March. I will say that liquidity at the front end has improved a little bit. The SOFR rate falling pretty close to the interest rate on deposits. There's still some spread. That's maintaining, but we'll see what happens with OPEX. OPEX is tomorrow for November. There's usually a higher amount of cash demand on OPEX, and so that might have some kind of significant effect. Definitely a lot of sell volume on NQ today. Leverage picking up, but the market falling, and so this is generally not a good sign. Down market, increased leverage, usually like people are levering up the downside, which opens some pretty significant range given how far we've climbed since April. And you can see those technicals a little bit better here. We have fallen through both the 30 EMA and the 20 MA and the 50 MA, and now we have fallen through the 2022 bull trend in a very convincing manner after getting a slight bounce off of it over the last 2 days. This opens up, our next major downside test is 6508, which is like the August high. Falling back into the August, like falling back through the August high, probably opens a move down to like 6360, or even maybe back to like the 1929 trend, which we really should not have broken out of anyway. Last time in April, our breakout above that trend was very brief. This time, not so much. But you know, below 1929, the 200 MA, and then things start to look really bad after that. So yeah, we'll be looking under 6500. We'll be looking at 6360. If we fail 6360, I would say back to like 6212, where we got support in July and then again at the beginning of August. That's a fairly significant level as well. So that's what I'd be watching to the downside. If we get any kind of bounce anywhere in here, especially off of 6360, I would look for a retest of the trend. If there is no retest of the trend, it just continues to fail. Volatility is going to get real weird real fast. Anyway, I think that's about it. So I will see you guys tomorrow. Have a good night. Later.